Have you ever watched price suddenly reverse or spike and thought, where did that come from? Was it the news, an earnings report, tweet? Most traders assume those moves are random. They feel the market is rigged against them. The truth is far simpler. What looks random is almost always market structure at work. People new to investing often think you can't just draw a random green line and expect price to move there. That's silly. Yet once you understand how institutions actually use trend lines, support and resistance, and institutional price action, those lines stop feeling random and start revealing the real order behind price movement. In this video, I'm going to give you a clear overview of trend lines and show you 4 real examples across different timeframes and instruments. You will see how the same market structure principles apply whether you are investing for years, swing trading for weeks, or day trading for minutes. By the end, you will understand why trend lines are one of the most reliable tools in a professional trader's toolbox and how they form the foundation of the Bison Blueprint system. Market structure is simply the framework of swing highs and swing lows that price creates over time. It shows where buyers and sellers have historically stepped in with enough force to change direction. Trend lines are one of the clearest ways to visualize that structure. They connect those swing points and act as dynamic support or resistance levels that institutions repeatedly respect. When price reaches a well-drawn trend line, we often see a reaction, either a bounce or a decisive break. This is not random. It is the result of real supply and demand at those levels. Once you learn to see market structure, price stops surprising you and starts making sense. What used to feel like chaos becomes predictable behavior based on how institutions actually operate. So before we hop into some charts and some examples, let's talk about what are trend lines and why they matter. A trend line is simply a straight line that connects 2 or more swing highs or swing lows. On a bullish trend line, we connect swing lows. On a bearish trend line, we connect swing highs. These lines represent areas where buyers or sellers have historically stepped in with enough force to change the direction of price. Institutions respect trend lines because they reflect real supply and demand levels. When price reaches a well-drawn trend line, we often see a reaction, either a bounce or a break. If you'd like me to do a dedicated video on exactly how to properly draw trend lines, just let me know in the comments below and I'll get that recorded. Let's take a look at the weekly chart of TROX holdings or TROX from 2011 to today. Before I point it out, let's see if you can identify where the trend line might be on this chart. A major trend line formed by connecting the swing highs in 2012 to the swing high in 2014, and from there we can establish our trend line. When we draw bearish trend lines, we always draw them in red, and when we draw bullish trend lines, those are always green. As you can see, price respected that same trend line again here in late 2017, and then again respected that same trend line in late 2021. This is classic behavior when a long-term trend line is this obvious. And then here in late 2024 or mid 2024, price didn't actually make it all the way to the trend line and it came up just short, which is something that can definitely happen with such well-established trend lines like this. One important thing to point out is that at these peaks, the narrative and the outlook on the stock is generally really positive. And that's where retail investors pile in late and get burned by situations like this. And that's where you want to start to reverse your thought processes by buying low and selling high and exiting at these trend lines instead of buying the FOMO at the top. Let's hop into another example here with Ethereum. And this shows us that trend lines can work on any instrument, cryptocurrencies, stocks. We're going to get into a couple other examples in this video too, but remember that every financial instrument that can be charted follows market structure. So here, when we look at the Ethereum chart, we go back to mid 2022, and we can start to build a trend line using these 2 small swing lows here that creates this bullish trend line for us. We'll make this a little bit bigger since we're on a higher time frame. And we can see almost to the penny, price respects that trend line here in the middle of 2025, in April of 2025, and subsequently goes on to a massive run, climbing from 1387 to almost $5,000, and then runs into another parallel trend line that has formed connecting these swing highs at $5,000. And that's why we saw such a large sell off there, especially when you throw in the resistance level that we see here at around $5,000. So the confluence of those two led to a significant rejection. So now when you look at the current price of Ethereum, we are expecting the price to come into this trendline support area one more time around $1,500 to $1,600. We also see that there is a medium-term trend line on Ethereum that is being respected, and as we speak, is currently being tested at this $2,200 level. So as we zoom in on this, we are expecting a failure here down to that $1,500 level. However, if it does break at this level, then the bullish change of character has occurred. So this is how to properly use trend lines, especially on this third touch here. The third touch is really the trap for investors that don't have trend lines on their charts. So when it becomes this obvious, when you have two very clear swing highs, you have a very perpendicular channel here. This is the very obvious shorting opportunity in the last place in the world that you want to get long. You either want to get long here at 1500, or you want to get long when price is actually broken through this trend line here. So let's take a look now at the dollar index, the DXY, and show you that this can work on a very high time frame, high level macro example for another type of financial instrument. So the US dollar shows the same behavior over 15 years, a major bullish trend line from these 2011 lows near $73 connects with the 2013 lows and the 2021 lows. And price is currently sitting at that bullish trend line support. You can also draw a parallel trend line on the top side by connecting these two swing highs. And as you can see, it's respected that trend line a third time as it arrived here at 114 back in the end of 2022. Now, as you can see with the dollar index, we have our large time frame trend lines that I've made really bold. And you also have our medium time frame trend lines that I've made a medium size here, where this bullish trend line has been repeatedly respected 1, 2, 3, 4 times after it was formed by the second candle. And again, we have a parallel channel being formed here. So what you want to do is always get bullish when you see these confluences of green trend lines. So here I'm expecting a significant rise in the dollar over the next couple years from this $100 level all the way up to this $120 level. Now, again, you're going to see a lot of news articles talking about the bear case, the bull case, whatever. But what really matters is the institutional price action more than the narrative that you're hearing. Now, obviously, significant narrative events can change things, but you really want to learn to play the price action here in the bigger picture. Now, let's take a look at which is Australian dollar futures, which trade against the US dollar. So they trade against the DXY pretty much. Not exactly, but that's a good shorthand explanation of it. So here, when we look at the large picture chart for the last 15 years, we can see a couple of trend lines. And this is something that we touch on in our course and in our community, what to do when you have a couple valid trend lines. But you can see here, price is continually respecting this trend line over the last 5 or 6 years, only to finally break out. Obviously, over time, one of the two trend lines has to break. So we have on a large time frame, we have a break and retest pattern forming on A. But this is where you can see that trend lines are super effective for day traders as well as investors. So let's zoom in here on the Australian dollar, and we start to see that we have a very clear trend line channel being formed here on Hey, now this is a trade I took a couple weeks ago where we're able to connect a couple of these swing lows, and then it becomes very obvious here as price pulls into this trend line that it's time to get bullish and it's time to target these upper trend lines. Now, again, we talk about sometimes there's some confusion about trend lines. So I have both of them on my chart here. Both of these are kind of valid. So it's something to consider as you go through this. But I was able to take this trade long and swing trade this for a day or two and get out when price got to this trend line. So this is a great example of how trend lines work in every scenario, whether you're an investor, a swing trader, or a day trader. So now that you've seen how trend lines work, how do they fit into our Bison Blueprint system? Well, trend lines are a core part of the market structure pillar in the Bison Blueprint. We combine them with order flow leads and price action confirmation to create high probability A plus setups across any time frame or any instrument. That's why the framework works whether you're investing for years, swing trading for weeks, or day trading for minutes. The confluence checklist stays the same. Once you have that repeatable process, price stops feeling random and starts feeling logical. So if you're tired of price feeling random and want to learn how to read market structure and trend lines the way institutions do, the Bison Blueprint Discord was built for exactly that. Inside, you receive the full Confluence checklist, daily watch lists already filtered through the system, live office hours, and direct chart reviews with me, in addition to alerts on my entries and exits for day trades, swing trades, and investments. Price action and market structure are the most reliable tools for any time frame. A mechanical checklist that forces confluence between these elements turns trading from emotional guesswork into a repeatable, reviewable process. Your past failures with indicators, gurus, or single instrument strategies are not proof that you cannot trade. They're proof that you lacked a unified, confluence-based framework that filters the entire market for A-plus setups. The community is for serious traders and investors who value structure, process, and long-term skill development over hype. The link to join is in the description below. I look forward to seeing you inside.